right, the Federal Reserve kicking off its two-day policy meeting this morning. It is expected to end in a 75 basis point rate hike tomorrow afternoon. The announcement on that will be 2 p.m. Eastern. Wall Street has been expecting at least a 75 basis point hike since the Fed raised rates by that much in June. But the Fed funds futures market is still showing a 25% chance, albeit a small one, but still, that the Fed could go even higher, boosting rates a historic full percentage point. Well, what is Powell going to say? And in this hour, when he faces reporters, what do we need to hear? Joining me now, NatAlliance Securities Global Fixed Income Head Andy Brenner, who says his company expects a hawk to take the stage tomorrow because he's got to get inflation down. And Barron's senior reporter, Lisa Beilfuss Popeo, who's expecting to see the pinnacle of the Fed's hawkish tear tomorrow. Actually, it's Lisa. I saw Liza. I know it's Lisa. I read your stuff all the time. Andy, I will begin with you. What are you expecting? Any chance of a 1% hike?
No chance at all, Liz, for a 1% hike. It's going to be 75, but it's going to be a hawkish 75. There are many out there that think he's going to be dovish. I saw it in the Citibank commentary this morning. I just don't see it. He has a limited opportunity, a limited window of which to raise rates before the country starts to increase the recession fears. He really should have been raising rates last year, but we missed that, so we can't go back there. And if he doesn't get aggressive now, the window will close, and the same thing goes for the ECB. They both have to get aggressive as soon as they can, get it out there while they can, and hopefully move 10 years from 275, 280, where we are now, back to 3 to 3.25.
Yeah, I mean, the 10 years going in the wrong direction, folks. We can look at it right now. I'm looking at a print of 2.79%, 2.75% here. You compare it to the 2-year, which is at 3.05%. So again, we have inversion. Lisa, what are you expecting? And let's move it beyond that and say, when do you expect the Fed to turn dovish, or should we even be discussing something like that?
Well, thanks for having me on, Liz. Sure. I think Andy's right about the 75 basis points tomorrow. I don't think the Fed will surprise us with a full point. I think that's in part because some of the data points have moved in the right direction. First and foremost, consumer inflation expectations, they're still elevated. It still means that the Fed is going to have to be aggressive and hike for the remainder of this year at least, but they're not going to have to become more aggressive. I think that 75 basis points, Jerome Powell has told us, is not going to be a common thing. I think this will be the last one, the last hike of that magnitude before the increments start to get smaller through the rest of the year. I think the big question for investors is, when does the Fed start to cut rates? A lot of people are starting to expect the Fed to cut in early 2023. It looks like that is probably too soon.
Yeah, might be. And I want to show Lisa's piece from this morning in Barron's. You quoted Piper Sandler's head of global policy, Roberto Perli, who says, and this makes perfect sense considering what happened with Walmart last night. He says the markets are underappreciating that inflation is much higher than at any time in the modern Fed era. The labor market sure is much tighter than normal. But to that point, Andy, and Lisa's point that she highlights here, where do we see the real danger still ahead? We want to prepare our investor audience.
Liz, the biggest thing the Fed could do is over-tighten. And as much as I think they're going to be hawkish tomorrow because their window is limited, if they send the economy into a spiral of a recession, a bad recession, that's not going to be good. On the other hand, right now we see inflation coming down quite dramatically from 9 to 5. That's still 5%. That's 5% with 10 years at 280, as you just pointed out. I don't know how the Fed gets from 5 to 2, and nor do I think 2% is the right number. There's so much that has changed with COVID, its supply chain. China is no longer the deflationary element of U.S. inflation. So I don't think 2% is the right level, but I see the Fed in a real tough spot with, if you all of a sudden have 2% negative GDP, then how can they keep raising rates?
Okay, we are tight here. We got to run, Lisa, so I want a short answer. But Andy sat down on the set and he said that Janet Yellen is supposed to have a news conference after the GDP report on Thursday. What are you expecting here, and how serious could this be?
We don't know yet. Some economists are still expecting at least a small amount of growth for the quarter. I look at the Atlanta Fed's GDP tracker, and that one is predicting another negative print for the quarter. I think some of the data releases this week will give us more insight into the future path of Fed policy.
Andrew, Lisa, great to have you both. Read Lisa's pieces in Barron. They're brilliant. All the Fed action begins tomorrow. As I said, 2 p.m. Eastern with the Fed rate decision, but that's just a, hey, here's what they decided. Then it's followed by Fed Chair Jerome Powell's July news conference that starts at 2:30, but it always carries into the 3 p.m. Eastern hour. And this is where the juicy parts come, the questions from the press. We will have complete post-game reaction and analysis tick by tick for the markets right here on the Claman Countdown. We are coming right back. Dow is down 269 points.